and welcome to Indianomics. The Reserve Bank has given itself a new goal on NPAs or bad loans.
I want to put something like March 2017 on the table as when we hope that a full cleanup will have been done.
Well, today on Indianomics, we discuss how big is the bad loan problem. 2, should banks recognize more of the bad loans more ruthlessly? And 3, can banks possibly provide for all the bad loans in 6 quarters? We'll be speaking with 2 stalwarts, Mr. G. Padmanabhan, former Executive Director of Reserve Bank and now Chairman, Bank of India, and Mr. CVR Rajendran, recently retired Chairman of Andhra Bank. We will thereafter be also joined by SBI Chairman Latha Venkatesh. But first, here are some numbers from a recent Credit Suisse report. Credit Suisse says it has studied 3,700 companies with an aggregate debt of $500 billion or 33 lakh crore rupees. 21% of this debt is with companies whose EBITDA or earnings before interest, depreciation, tax and amortization is less than their debt for the last 4 quarters. Now that works out to nearly 7 lakh crores of debt that is under stress. 2, Credit Suisse says 4 lakh crore or $63 billion of debt is held by companies whose earnings before interest and tax is less than the interest bill for 12 quarters in a row. What's worse, only 10% of this debt has been marked as NPAs so far. 3, the brokerage believes that the gross NPLs account for 5.8% as of September, but stressed assets, that is NPAs plus restructured assets, account for 11%. More important, adding the chronically indebted companies, the load will work out to 16% of bank loans. 4, 85% of public sector banks, accounting for 50% of the loans, have their Tier 1 capital less than 8% and unprovided problem loans accounting for 100% of their net worth. Pre-provisioning operating profit for PSU banks declined by 2% in September 2015 from their year-ago levels. Also, the NPA coverage for PSU banks is between 30 and 50%. Well, those are the facts. And now I am joined by Mr. G. Padmanabhan, the former Reserve Bank ED and currently our Bank of India Chairman, and Mr. CVR Rajendran, just retired Chairman of Andhra Bank. Gentlemen, thank you very much for joining me in our studios. Well, Mr. Rajendran, since until very recently you ran a bank, what is your sense? Is the truth at 5.8% of the book? Is it at 11% of the book? Or is it, at Credit Suisse says, at 16% of the book?
It all depends upon how you take that number. Okay, if you take the NPAs plus the restructured accounts plus the SRs which are outstanding plus the 5/25 which you have done over a period, under the SMA accounts also, it could be 16%.
No, that is definition.
Right.
What I'm asking you is, as a banker, do you really think 16% of the book is so stressed that it has to be provided for? Or, as several bankers claim, that much of it or some of it can be retrieved?
No, most of it can be retrieved. It may not result in an ultimate loss to the banks. But the only thing is whether it will be in a position to service the debt according to the original schedules and will be in a position to remain outside the NPA purview. They may not. I feel that 11% may not be a very wrong estimate. 11% is under stress.
Okay.
Out of which some of the accounts could be in a position to service the debt as on date which are able to do as per the restructured terms. Okay. The fear comes when the restructuring moratorium is over and when they start repaying for the loan as per the schedule, whether they will generate sufficient cash flows to service the interest under the installments which are falling due. Okay. It will be possible provided the economic turnaround happens and the capacity utilization increases. Okay. That is the assumption which you have made.
Okay, no, the assumption of that the 16% is not stressed rests on the assumption that some of it can be given to better promoters. After all, that is the purpose of the strategic debt restructuring. The promoter is beleaguered, but the asset is good. If you take that assumption, that it goes, a steel company goes to, say, Tata Steel, whose promoter has deep pockets, even if the company is under stress. If you take that assumption, do you think still 16% is stressed, Mr. Padmanabhan?
So first of all, I wouldn't know how this figure has been arrived at. On the face of it, it looks a little high. That's all I can say, because I will not be able to say this for the system as a whole. But having said that, I think if we are taking into account the possible success of all these measures that have been put in at different points of time, the numbers definitely will be much lower. But the point that is being driven at is that if you start cleaning up the balance sheet, once the positive things happen, at that point of time when you start reversing these provisions, then we are going to end up with a banking system which is very strong. I think that's the idea which needs to be appreciated.
Okay. But given the capital constraints, I mean, the government has promised 70,000 crores by way of capital and hopes that the rest will be raised by the banks. You must have done the math up until when you were there in Andhra Bank. Do you think that capital will permit you to recognize a lot of loans? Is it that loans are not being recognized because you have a problem of capital? Given the capital numbers, can banks now recognize up to, say, 8% of their book?
If you talk only about the bank which I served, they will be in a position to do it because our provision coverage ratio was 62% at that point of time when I left the bank. And they had a lot of room for raising the Tier 2 bonds, Tier 1 bonds, as well as capital also. So even without going to the equity market, which I was not very particular at going, because the book value, even at least one time book value I wanted to have as a price. So even if I raise only the Tier 1, Tier 2 bonds as per my eligibility, I will be in a position to manage the capital requirements. And there is appetite for these banks' bonds in the market. Okay. And there could be one more thing which can happen, is a windfall gain of
Andhra Bank could have recognized 11% or whatever their restructured plus.
Whatever the restructured assets which are likely to slip. Not everything is slipping. Okay, maybe about, my experience was 10 to 12% of the restructured assets are slipping every year. Bank will be in a position to provide for it. That may not be a problem for that bank. But that bank had a large amount of NPA and restructured accounts, more than this 11% together. But still they will be in a position to provide for it. They had the wherewithal and their profits were sufficient.
What is your sense for the system, Mr. Padmanabhan? I know I'm asking you to exercise your extrapolation a bit too much, but you have seen it from the regulator's end and now you know at the bank end as well. Do you think that with the 70,000 crore of capital and a little bit of retained earnings, the banking system will be able to provide for most of the stressed loans, assuming that, say, 30% of the stressed loans will fail?
I have a slightly different take on this. I mean, let's not worry about the numbers. The question is whether the capital that's coming in or that's likely to come in can be entirely used for just declaring bad assets. No, I think it's a combination of you should be able to grow and then earn, and it's a combination of that which should take care of the problem on a sustained basis. For every time if we think that if there are bad loans, capital is being pumped in, then you recognize more bad loans. I think that's not the way forward. So I think that's the balance we are trying to strike, I think even in the Bank of India, and that's how, in my view, it should be the way forward.
What's your sense about Reserve Bank's move that strategic debt restructuring cases should be provided for earlier, at least partly, because at the end of 18 months, if you are going to provide, their argument is that you would have paid tax and dividend on an overstated profit. So is that the way to go?
I fully agree on that. There is no purpose of providing taxation also on that for an unrealized profit. And when it is given to the STR itself, it shows there is an inherent weakness in the account and we may not realize the full value even if the new promoter comes in. Most of the cases, we must be taking some haircut at some point of time. It is better to recognize and better to make conservative provisions from the beginning itself so that we will be building sufficient cushion when the realization happens. Okay. It's the right thing.
The other problem will be this restructured as well as, I mean, I will put the 525 assets in the same restructured basket, though, you know, we choose to call it refinancing. Mr. Padmanabhan, do you think that we can wait for growth to solve most of those cases? Or do you think at some point in time, government, corporate sector and banks will have to take the decision of pulling the plug on some very marquee investments?
See, two aspects. I think first of all, the 525, in my view, was not introduced with a view to tackle the NPA alone. It was a bit of an asset liability management issue also, because you are asking banks to finance some projects and that asset liability issue had to come in place. But yes, I agree that if we are talking about the whole host of issues that we are talking about, the whole number of accounts, there will be certain accounts where it will be prima facie, the business model itself is doubtful to succeed, whatever be the circumstances, whatever be the turnaround. Here the banks will have to take a conscious decision that there is no point in spending good money after the bad debt which has already happened. So that's a qualitative call that I believe the banks would be now taking, now that the whole system is geared up to cleaning up the balance.
Do you think that the governor putting that date and deadline and stepping up the pressure was primarily intended for that at least recognize cases a little ruthlessly?
I wouldn't like to guess what was in his mind when he said that, but obviously when we start doing something, we have to work with a deadline.
Okay.
I mean, there is no point in saying that you start doing it and there is no deadline to that. Then the people do it at different pace. When the entire system is now being taken together, obviously we have to work with a deadline. So he has given a deadline we need to work with.
Okay. Well, what's your sense, Mr. Rajendran? Do you think that we are going to see increased provisioning and therefore pressure on profit for the next 6 quarters? That is something the system should be prepared for?
Certainly. Provisioning will go up. Even the banks, now that they know that by 17th of March we have to clear the balance sheet, they will proactively provide more if they have more profits.
Okay.
Profits declared will be much lesser. Even as I said, even though it's not an NPA as on date, or likelihood of becoming an NPA also will attract provision now. So that let me clean up, the good days are coming. One good thing which I expect to happen is, like it happened in the past, the treasury may start giving very good yields if the interest rates are going down, which has not happened. Last time from 12% it has gone to 4.89%, given such a windfall profits. This time the moment is not that fast so far. When interest rate starts falling, if I see 5% again, banks are sitting on a very big book which will give sufficient money to clean the balance sheets.
Actually, the difference between last cycle and this cycle was that last cycle, the coming out of the cycle was accompanied by a big global boom, which created space for falling of market yields, as well as an improvement in growth. This time
this
around
becomes important. In fact, the point that I would like to add is that the economy turns around and growth starts to happen is going to give momentum to this, because basically if we want the denominator to expand as far as the credit portfolio is concerned, it is important that we start financing the new projects. So for that to happen, the growth has to happen. Otherwise, it will be a sort of a double whammy.
Absolutely.
And that's a point that we are all worried about. So let's see how it moves.
That is a major problem. Today, the NPAs are growing in the public sector banks, but credit is not growing in the public sector system. The private banks have the maximum market share in the incremental credit growth. The move to sanction new loans is not happening in the public sector banks. Unless the balance sheet size grows, in percentage terms, NPAs will not come down. With the same book size, providing for these bad loans is a major challenge for us.
But would you at least say that at least all the poison now is known, and it's a question of being able to find partly the growth and partly the capital to solve the problem? Would you say at least we will not have probably unknown unknowns?
Not many.
Okay.
Not many at this point of time. There could be some, but there is not many accounts. Almost we identified all the problems. In fact, 5/25 we are talking about it. See, take the case of airports. We are given a repayment schedule of 7 years or 10 years for the airports. We know what kind of airports we have built in Delhi or Bombay or today Hyderabad or Bangalore. All these airports are generating much more revenue than what they originally projected. The problem was the initial period. The implementation period has gone much beyond the schedule, and the monetization of the extra land has not happened as per the projection. So airports have become a problem. But now after the reschedulement over a period of this 5/25, they are generating sufficient money to pay. Similarly, your power projects which are completed, now we are putting so much of pressure on completing the unfinished projects. Once they are completed, they started generating revenue. There should not be a problem. Road problem is already sorted out. So many cases the government has taken initiative to sort out the problem, and these will come out of it.
So would you say, Mr. Padmanabhan, I mean, I'm just looking for a straw of hope to cling to, that probably the worst is known and things can't get bleaker for the banking system?
I would put it this way. I think the problem has been recognized. Whether the entire problem in its, if you are talking about a 99.99 level of confidence, I don't know whether we have reached that level, but most of the banks know where they are, and with the push coming in from the Reserve Bank and the government to make sure that we recognize the problem, address this and move forward. Yes, everybody knows that for a few quarters the balance sheet should be stressed. I think that's the right way forward. So it's a good thing that's happening.
All right, we'll have to end this conversation on that note. Thank you very much for joining Mr. Padmanabhan.
Thank you.
Okay, we take a break on that note, and thereafter we will be joined by Arundhati Bhattacharya for her idea of where we stand in the process of cleaning up balance sheets.